Hi everyone and welcome to today's morning report on Friday the 19th of December with me, Rich Perry, market analyst at Handtech Markets. The European trading session has once again been started off on a good footing. That has come on the back of another huge day on the on Wall Street markets, into a second significantly higher day now. On the S&P 500 up 2.5% almost yesterday, closing at the day high, and a very big run that we're having at the moment. The big change in sentiment has come with a couple of things, really, a couple of factors. The big one mainly being the FOMC statement that and Janet Yellen's press conference that suggested that the Fed remained accommodative and also was going to be, in inverted commas, patient over the next couple of meetings in terms of hiking interest rates. So no prospect of an imminent rate hike on the from the Fed, and that has certainly helped to drive sentiment higher, giving a bit of support to the markets, and also the oil prices been finding support as well. So that has turned around sentiment significantly. The VIX, for example, has sharply moved lower in the last couple of days, and as we know previously with the VIX, any sort of correction in the VIX, this is another chart of the VIX, any correction in the VIX tends to be fairly indicative of a rally that we had, and that certainly was the case in October. So could this be the start of this Santa Claus rally for the VIX and the S&P 500? So also on dollar index, we had this pullback to the support, that huge rally that we saw on Wednesday, and that's sort of just now consolidating a little bit, although it is still continuing to strengthen. The yen is weakening as the sentiment has improved on financial markets. So the flight to safety is no longer necessarily a trade that people are looking at, and that is hitting the yen, pulling dollar yen higher. Also, the euro has come back as well as this. The euro dollar price has fallen away as the dollar has strengthened as well. In terms of what we're looking out for today, not a great deal really. We've had overnight the Japanese Bank of Japan monetary policy statement. No change on monetary policy, although they slightly enhanced their projections, but going forward, but nothing really to get too worked up about there. And today, this afternoon, we've got the Canadian CPI inflation data at 1:30, and just a slight improvement month on month is expected, 0.1% up on that. That takes me to my chart of the day, and it's the Kiwi dollar. And you look at this Kiwi dollar over the past month, several occasions we've come back, and now we're using this as a big downtrend over the past month. But also look at this 55-day moving average. Now this is an interesting one because every time we've had the 55-day moving average breached in the last month, and I think it's around about 7 occasions. Each time it's only done it on an intraday basis before the correction has come back in again. No close above that 55-day moving average. 55-day moving average currently comes in at 77.88, and we're only about 20 pips away from there now. And already on an intraday basis we've pushed above that. So again, it seems to be happening once more. So I think that rallies are certainly a chance to sell on this Kiwi dollar. This is on the intraday chart. You've got that downtrend that's drawn in. Has been hit time and time again on this chart, and certainly looks to be the basis of a sort of selling into strength strategy on the Kiwi. And I think certainly it looks like we're going to have continued pressure. This back on the daily chart, continued pressure back towards the lows, that kilo that we saw in early December, coming at 76.06, which is around about 150 pips back from where we are at the moment. So there is still room for a fairly large amount of downside in this chart. Okay, so I wish you good luck in your trading on the Kiwi dollar today, and I will speak to you later. Thank you.